Eric Muathe. In this educational video, we're going to take a look at one stock, and we're going to be taking a look at the advantage of using monthly charts to decide whether you want to be in a stock for a considerable period of time or whether there could be a trap in the longer term outlook for a stock. I bet you that most investors spend time looking at charts from a weekly and daily standpoint, and if you're a day trader, maybe you go into the hourly, the 30-minute, 15-minute, and the minute charts. That's really up to everybody's trading personality. So, the market has different ways of looking at it. But if you're a swing trader and you like to own stocks for a couple of months, maybe for a long period of time, it's important to take a look and consider the monthly chart. In this example is a perfect type of learning lesson here that we can use to identify why we should consider the monthly chart. So let's take a look at MXWL right now, and I'm making this video May 13th, 2014. On the weekly chart, which is what you have here, we see that the stock had a nice breakout above this long-term weekly wedge. So there was, in hindsight, a nice entry point there, and the stock had some legs because it had 2 weeks consecutive after the breakout. So that's a good breakout. Now you see that it settled down here after closing here, settled down and has been trading in this range, and recently you saw it pop above that $15 level and is staying above the $15 level. So right now you can say it's this breakout above 15 continues being in effect, and you can also see that there are some good things going on the weekly RSI, getting very close to trading above 69.10, and you can check out my videos on why 69.10 is an important level. I believe every technical analyst should know this number here. And also you take a look at the MACDs. You see that the MACDs are trading where you want a momentum stock to be trading at 2-year highs here, and also you see that recently the MACDs broke out. So in terms of the technical aspect, the weekly looks good. If it can hold that 15 level, and again the 15 level is just this previous weekly closing high there, anything above that is a sign of momentum to the upside. If we take a look at the daily, we see that the stock continues trading well off the 50. You can see there's some type of a trend here, and as long as the stock is holding above that general trend line, seems to be a wedge here. Now this wedge could be a problem because this is a bearish wedge in my opinion, because you can see it's narrowing down, and if you break below that, then that's what you call a bearish wedge. Now it is possible sometimes powerful stocks will break above that, and that's also a powerful buy signal, but I believe this is a trap in my opinion right now. Now on the daily, you see that there's a wedge forming here. There's a topside wedge there, and there's a wedge here on the bottom. So the stock is trading in a wedge in terms of the price and in terms of the RSI. So the price wedge is here, you can see it very clearly. There's a wedge there, and there's an RSI wedge here. So the stock is in some type of consolidation. Eventually it's going to break out of this wedge for a bullish move or for a bearish move. Now let me show you the 3-year monthly, and you can see on the 3-year monthly this meets our minimum requirements, making 3-year highs. So that's one of our requirements there. That's bullish. And also take a look at the MACDs. They're at 3-year highs, which is another requirement. So 3-year highs on the MACD, 3-year highs on the monthly RSI. So everything checks out. Now if I go back and take a look at the stock, not from a 3-year standpoint but from a long-term standpoint, and here we're looking at the stock since the 90s, since 1990 on a monthly chart, you start seeing there's some signs of trouble here, and something that anybody who wants to belong this name for a while needs to consider. Take a look at this break here in 07 right there. So this break took place here in 07, and so we know that was a major high because the stock was trading at $20 in that range, and would go on to trade as low as $4 during the crash of 2008. Now all you have to do is draw a straight line from that break. Once you get the break point here, you know that every time you bounce off this line and find resistance, especially if it's uniform action or resistance at the line, which is what happened here, you know that's a high. So all you have to do here is know that this is not going to work out, and you can see that it tells you when the stock is going to drop on a monthly chart. Again, you came close to the line here, which corresponds to this level here. You came close here with double top here on the monthly RSI, which corresponds to this major drop, again at $20, before dropping all the way to 5. So what I'm trying to say here is you can see right now with the stock up about 5% for the month, if it turns around or the next couple of months and looks like that, then you have another major sell signal on the stock. So yes, the stock looks good on a daily, it looks good from a 3-year monthly, it looks good on a weekly chart, but on a long-term monthly chart, there is a sign of some trepidation here. Anything that shows resistance here on the RSI is going to be bearish. Now, just to test that theory, what we can do is back test that and go back. You can see here was a sell point. If we travel backwards, was a sell point there, which was this high. So that could have been another way of knowing that the stock could have gone down. Let's continue back testing that line, take it back to there. You can see that there was uniform action here above the line and back below it, and that also happens to be the all-time high of the stock in late, or at least beginning of 99 at about $40. And so we can see that if we take it even farther there, see that every time the stock drops below this level like it did here in 98, which was this drop here, the stock went down. All to say that above that line the stock can do well, but as of right now this line here has been resistance, and if you find that on a monthly chart it's turning around and showing you resistance, you have to respect that more than likely this is gonna take the stock lower. If the stock can break out above that resistance level, then you can probably say now, for the first time in more than 16 years, the stock is gonna move higher, and it's probably gonna find resistance again, even on a price level around here. You can see this has been resistance range going back to 2000. So there's a lot of things here. To me, the long-term picture, and that's why I like using monthly charts, is that they can tell you what the stock is doing from a long-term perspective. Now, there's one thing I didn't talk about here, and I can talk about this briefly. You'll see there was a break of this trend line here, a major break of this trend line. So there was a break here beginning of 2012, and so what the market is doing, it's come back to test the break, and you can see that break is currently at about $17. So if the stock cannot move above $17, which is the previous break point here, then that's another signal from a price perspective that the stock is gonna go lower. So let's watch this stock the next coming weeks, next coming months. We'll see whether these monthly charts are telling us that the stock could run into trouble. Of course, anything above the resistance levels here and also here would suggest that the stock is now for the first time gonna trade different and might move higher. For now, I see lots of resistance on the price here, on the price here, and also on this level here on the monthly RSI. Eric Muathe, good luck, peace, and blessings.